Hello everyone. This is the pre-market report video for today, 24th March 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Last week, every single day, Nifty increased and closed positive. Hence, it had one of the best weekly increase 4.3% in the last 3-4 years. Not just Nifty, almost all the sectors increased substantially. Mid-cap and small-cap increased around 8%. The least ones were FMCG and IT. Not sure about the FMCG underperformance, but regarding IT, it's due to the Accenture poor future guidance, which we discussed in detail in the last video, and uncertainty around the US economy. Here, the surprising thing was pharma industry also having huge revenue from US, but still pharma stocks increased 6%. About institution wise, in the cash market for the second day in a row and third session in the same week, FII was net buyers. They net bought for near 7,500 crore rupees. And hence on the weekly basis also, they net bought for near 6,000 crore rupees. See, FII net buying for massive amount is always good thing for the stock market in any way, but still it's worth to understand in depth. Please look at the gross purchase and gross sales value. It's 40,000 to 50,000 crore rupees. Usually, this value will be around 10 or 15,000 crore rupees. But last Friday, it was much elevated like 3-4 times. You might ask me why. The answer to that is mainly because of FII emerging market index rebalancing. So, as per IIFL Securities, they said they are expecting this FII index rebalancing expects to bring around $1.6 billion US. If required, please pause and have a look. These are the stocks they listed that how much money they possibly received due to the index rebalancing. And all those stocks last Friday closed significantly positive. Hence, we can't take this FII buying as positive. At the same time, if FII index weightage increase on the Indian stocks means it's due to that stock's fundamentals and technical improvement. Hence, we can't rule out this FII not enough buying as negative either. So, let's wait for 2-3 sessions more to understand their mentality. DI wise, it's obvious opposite to FII. So, they were mega net sellers. Net sold for 3,200 crore rupees. Anyway, moving on. Then about participant-wise open interest analysis on the derivative market. In response to the weekly expiry last Thursday, open interest unwound or expired about 24%, out of which last Friday 18% new open interest added. So already open interest positions fairly developed. One more thing, this week will be monthly expiry as well as financial year's last derivative market expiry. Hence those related short covering and tax purpose related profit booking, all we can expect this week. Now coming to index future market, last Friday too, FII unwound their short position by near 6% and added long position by 4%. Hence, at present, their short position open interest holding dropped to 68%. I think this is the first time this year 2025, FII is holding less than 70% short position. On the other hand, retail people reduced their long position to 58% from day before 60%. Here in the index future market, please ignore the proprietary traders. Their total holdings are not as significant as others, and also they are holding 65% open interest on the short position. That is for hedge to their index option position. In the index option market, proprietary traders holding 6.1% net as their bullish position, meaning they significantly makes more money if market goes up. On the other hand, last Friday, retail traders bought massive put options, hence now they are holding net 5.6% bearish position, meaning they make more money if market goes down, whereas FII was very much neutral. Hence, considering both index future and index option market, proprietary traders wants the market up, retail traders wants the market down, whereas FII neutral with negative bias. So those were the quick takeaway from last Friday's market. Then coming to US market, all three major index opened negative, but all three index recovered all those losses as US President announced that in a second round of tariff, he would be flexible for negotiations, which in turn made S&P 500 and Dow Jones to increase mildly 0.08% and Nasdaq outperformed as it was up by 0.52%. In case of VIX, it dropped 2.5% and moved down near 19. In line with that, on Saturday morning, Gift Nifty also increased and closed at 23,476. Now, equating that with the spot Nifty, it's indicating the gap up opening of around 50 to 70 points. And among ADR, as it is, all closed positive of above 1%. However, if we calculate the arbitrage, it's conveying the different info. I mean, we know on Thursday night, due to Accenture influence, Indian IT ADR was down around 2 to 3%. But then in Indian market on Friday, IT stocks didn't drop that much like ADR. It was down only around 1%. So, as per balance on Friday night in the ADR market, to equilibrium with market, both IT stocks to increase above 2%, but it was increased only around 1%. Hence only at present both IT stocks having a negative arbitrage of over 1%. On the other hand, both banks indicating further positive of 0.5 to 1%. As a summary, US market closed positive, so global momentum is okay. In line with that, Gift Nifty and banking ADR all indicating the gap up opening. In addition, at present, US future market is trading around 0.5% positive. But however, the negativity around the IT stocks is still a concern. One more thing, I don't know its influence, but Rogers.com released the statement that the Indian government is not going to extend PLI scheme kind of. If market take this as serious means, then it's negative for some manufacturing and particularly pharma stocks, since 94% of PLI scheme payment is going to either pharma or to the mobile manufacturers. On the other hand, there was a report released that on Saturday, OpenAI, Facebook and Reliance all three together held a meeting over a potential partnership regarding AI offering in India. So we can expect Reliance to be on focus today. Moving on, yesterday as per stock open interest, Supreme Industries, National Aluminium, JSL, Voltas, Sonata Computer, Geofensive and Birlasoft are some of the stocks that got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Torrent Power, HDFC AMC, KPIT Tech, SRF, ITC and Adani Green are some of the stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. Then regarding the things to look out, at 10:30 AM, India's service and manufacturing PMI data is due. Then around 2 PM, Germany, France and Eurozone PMI data is scheduled to release. And in the night for US, their PMI data and FMC member speech are some of the items we need to keep an eye out today. Coming to technical, last Friday Nifty opened 20 points gap down, but it quickly rebounded and increased as the day progressed. It then closed at 23,350. Thus on the daily chart, Nifty formed a long bullish candle and continued the higher high higher low formation for the fourth consecutive session. In addition, it continued to trade above the upper line of the Bollinger Band and above the 50-day exponential moving average, with all short and medium term moving averages all trending upward. Furthermore, momentum indicators also provided positive signals, with RSI climbing to 66 and MACD moving into the above zero line zone. Hence, a decisive move above 23,400 could drive the Nifty higher to the next resistance 23,600. A clear breakout above 23,600 might trigger another leg of the rally. On the other hand, failure to move above 23,400 could lead to near-term consolidation. In case of Bank Nifty, it opened around 130 points gap down. However, outperformed Nifty, then closed at above 50,500. Thus, on the daily chart, Bank Nifty formed a long bullish candle, indicating healthy momentum ahead. In addition, it maintained the higher high higher low formation for the 7th consecutive session, with RSI trending upward to 68 and MACD above the zero line with a positive bias. Hence, the next major resistance for Bank Nifty is near 50,650. On the options front, the maximum call option openers was at 24,000 strike, followed by 24,100 and 23,600, with the maximum new call option rating at 24,100 strike, and then 23,600 and 24,200. On the put side, the maximum openers was at 23,000 strike, followed by 22,500 and 23,200, with the maximum new put option rating at 23,000 strike, and then 23,300 and 23,200. Thus, from options data, Nifty's crucial resistance is at 24,000 mark, with key support at 23,000. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.